Hello, everyone. I believe we are about to go live. Thank you so much for joining us today and a warm welcome to the final market updates of 2021, which is pretty crazy to say that we are looking at the end of our events program and getting ready for a new year. So we're really excited to have you here with us today, and we're really excited for our amazing lineup. So thank you for everyone for joining us. My name is Kellyanne Watson, and I am the head of programs at the CLAS Foundation. And as always, I'm really excited to host today's session. So before we get started, I'd like to take this opportunity to thank our amazing partners for your continuous support. Because of you, we're able to make events like this happen today. A special shout out to our gold sponsor, GSA, and the silver sponsors, AS4 and SALTO Systems, and of course to our media partners, the Pi News and Study Travel. So we were founded as the class of 2020 nearly 10 years ago with the aim to collaboratively solve student housing challenges during an economic crisis. We grew with the community as a European think tank, shaping the future of living, working and learning within university cities. We have successfully graduated in 2020 and have now established ourselves into what you see today, an ecosystem that collaborates across the whole community. The CLAS Foundation. So I'd like to say a special thank you to our small but dynamic team, Evelyn, Manuel, Angelica, who are working behind the scenes today, of course, Frank, our co-founder and CEO, and welcoming our newest member, Omar, to the team. This year, we have been working extremely hard to create programs and opportunities which will enrich our community. And I'm very excited to share with you our vision for 2021, our annual conference. People, Place, Purpose, which will be hosted hybrid in November, all things crossed. And we will focus on identifying these game changers. So we're looking at empowering today and change tomorrow, an insight into Gen Z, the vision of university cities of tomorrow, how we can harness investment through the Europeans' recovery plan, how we scale and drive social value in our sector and beyond. And we're going to fast forward to the future of student experience with digitalization and community being a hot topic. So if you're really interested in joining us today, in joining us for our event and want to check out more information, and also maybe just check if I'm a real person and not a hologram from the future, head over to our website for more information on tickets and the programme. We have in-person and virtual offers. Finally, about the events we've got coming up, we have a community talk on Friday the 10th of September with partners Technogym, CRM and Nido. We're going to be focusing on the impacts of exercise and mental health. So hopefully within the chat function now, you can have a link to our to that event if you would like to join us. Okay, so I'm going to stop talking now. So we're going to go back to the event. This session will focus on current and future acquisitions, investment and performance within student housing within Austria, Czech Republic, Germany and Poland. If you'd like to get involved with the session, we would love to hear your questions on the app. Swapcard. You can use the platform to also network with each other, so make sure you take this opportunity to say hi. I felt like a real mum then, dropping my kids off at school, go say hi, don't be shy. So we will also be posting some polls in there to get you started, so you might be able to see those now as well. So post-event, make sure you follow us on the @CLAS Foundation on social. We'll be doing a write-up of this session of the key themes and also posting some further polls. So I would love to introduce our panel, but first and foremost, Stuart Osborn, Head of European Residential Investment Transactions. Couldn't ask for a longer title, Stuart, thanks for that. From Knight Frank, who will now present a short overview of the full markets and also moderate our amazing panel discussion. So please take the stage.
Thanks very much, Kellyanne, and thanks for having me here. It's always a pleasure to work with you guys and with the panel we've got here. So you'll be pleased to know that I'm not going to be boring everyone with a lengthy presentation to kind of go forward with. I think we've got quite a few markets to cover, and actually there's quite a broad spectrum which kind of encapsulates each of those, and I think each and every one of them probably deserves quite a bit of time on their own. So what I'll do is I'll kind of whistle through a bit of a high-level overview, and then I think we'll get to the main thing that everyone wants to hear about is probably what the panelists have got to say. So I mean, we'll probably hear from the panelists shortly, but I think the general theme is that there's plenty of reason for optimism towards the end of the year. We've certainly seen over the last few months, significant amounts of pickup in terms of transactions or interest or preparations, purely on the basis of more transparency over what this September looks like. And specifically across these markets, we've seen a real resurgence of investment activity, and we certainly expect Q4 to be a lot busier. Now, just to kind of run over each of these markets, I mean, unsurprisingly, in terms of transactions, being the largest in terms of student population with over 3 million students, Germany still remains the top of the list for PBSA investment on the continent. And in half one, we saw pretty much close to 330 million of investment, and I think the back end of the year is going to be significantly up on that. But I think perhaps more interestingly, when we look at where that investment has been coming from, we saw a significant increase of domestic investors over the first half of the year, which for H1 2021 accounted for 3/4 of all transactions, as opposed to the relatively nominal kind of 5–10% that we saw in the year beforehand, which ultimately means cross-border investment saw a significant decline from around 60% to 12%. Now, interestingly enough, obviously during the kind of the peak of COVID, more core stable markets like Germany were a big target for the kind of the pan-Euro funds. So really interesting to see the take up from domestic institutions, which I'm sure we can kind of hear more about from the panelists later. But I think when we look at how cross-border affects other markets, it's certainly just an interesting takeaway. Now, in terms of scale, Poland is the closest competitor in terms of size, with just over 1.5 million students, and although it's certainly less mature, offers more opportunity to build a lot of scale in multiple cities which have large student populations. International students in the country have increased by over 60% in the last 5 years, which is pretty significant. However, having said that, for where PBSA is concerned, domestic students still remain a key occupier. And certainly, as I'm sure we've probably all talked about in the past when talking about Poland, international students make up quite a broad mix, and a lot of Central and Eastern Europe students make up part of that international mix. So, but also we've seen some keen activity in the market this year, the likes of Zeitgeist acquiring Unibase, and I'm sure Gary will be pleased to tell us a bit more about their portfolio they acquired earlier in the year in Poland as well. But just flipping over to Austria, I mean, overall total student numbers have seen a pretty gradual increase in Austria over the last 5 years. They're sitting at just over 430,000 students in total at the moment, with international students really leading the charge of growth by about 15% over the same period of 5 years. So again, a real key driver there, and I think across all of these markets, you probably see a theme of the increase in international students being a driver. And investors, I think, rather than just clearly Vienna is a key focus, but investors have also been demonstrating appetite for other regional cities this year, with the Hamburg Trust acquiring Vernon Campus, Reininghaus and Graz. And also, I guess going back to Vienna, these are all this year as well, EHL's acquisition of the campus Altes Lange, which is about 300 bed spaces. So we're seeing still some real strong activity as we kind of see the bounce back. And as for the Czech Republic, they're probably just understandably a little bit smaller than Austria in terms of the student size, with about 370,000 students. They've equally seen an encouraging growth in international students as well, at about 11.5% over the past 5 years. and understandably, Prague remains a really popular city for students. And certainly, I think it's fair to say the market isn't as deep there, but we do see plenty of interest from investors who are looking to expand their CE portfolios into Prague. And we certainly expect further opportunities to come to the market in Q4. And it's certainly going to be interesting to see the growth in investor appetite with that. So with all this in mind, I think it'd probably be really interesting to kind of get down into the asset level and the decision-making side of things, and therefore it'd be great to introduce the people who are kind of making these markets and are key drivers in them. So we'll just run through a few quick introductions, if we may. Gary, can we start with you, please? I think you may be on mute, Gary.
That old schoolboy error. I thought we'd stop doing that. Yeah, sorry. I'm Gary Clarke. I'm the CEO of MILESTONE. MILESTONE is a vertically integrated owner-operator developer of student housing within Europe. We're based in Vienna. Currently have around 4,000 beds under operation through Austria, Portugal, Germany, Holland, and Poland, and a pipeline of around the same size, including in Italy. Yeah, so our most recent acquisition has been in Poland recently, as you mentioned, Stuart. So, and I think that together with our presence in Vienna and Germany is probably why I'm here today.
Great, thanks, Gary. Ulrike?
Hi, Ulrike Hagendorf. I'm the Senior Research Manager of CATELLA Residential Investment Management in Berlin. We're a residential investment manager investing in different residential asset classes, as also student housing, senior living, business apartments, and traditional multifamily housing. We started in 2008 with the first European residential fund and continued in 2013 with the first European student housing fund. The second was launched in 2019, so we're still acquiring quite a lot of student housing in Europe. In total, we have 5.5 billion assets under management in 10 countries, and of that, we have approximately 1 billion in student housing in 7 countries in Europe. Thank you.
Great, thanks very much. John?
Hi, I'm John Harcourt. I'm Managing Director of Kajima, which is the sort of European property arm of Kajima Corporation, which is a Japanese and Nasdaq, Nikkei, I should say, listed company that's a global construction investment development business. I'm mainly here though on the back of the student depot business, which we acquired a couple of years ago from Oaktree, along with our partners Griffin, which is now about 2,500 operational beds across most major cities in Poland, and we have about the same again due to be opened in the next 24 months, and with sort of reasonably ambitious plans for growth. So we're focused on Poland. It's vertically integrated, and yeah, it's going pretty well.
Thanks, John. Look forward to hearing a bit more about that later. Chris.
Also mute.
There we go.
Yeah. First of all, thank you a lot for the invitation and a warm welcome to all the attendees. My name is Chris Lange and I'm the founder and CEO of Coments. We have no units under operations yet, but what I can offer you is a glimpse into the future of PBSA. Over the last month, we developed a future-proof student housing concept. Therefore, I spoke to industry thought leaders and conducted a survey with over 1,400 participating university students. At the core of our comments are the pillars of sustainability, affordability, and well-being. We achieve these through our focus on co-living and the benefits of cluster apartments. You are very welcomed to be under the first to have a look on our freshly launched website, coments.com, for further insights. Thank you a lot and enjoy the panel.
Thanks, Chris. And lastly but not least, Enis.
Hi everyone, my name is Enis Bayik and I'm the Managing Director of Nido Student in Germany. Nido especially is a European student housing platform in UK, Ireland and Germany. Nido Germany operating 14 assets in 10 cities with around about 2,500 apartments with the focus for student housing and young professional living. So yeah, it's a pleasure to be here.
Great, thanks very much. Well, as I think everyone can see, we've got quite a broad mix across the panel, so we'll dive straight in. I think probably the best place to start at the moment really is just looking at how kind of everyone's kind of managed with operations over the last year before we start looking ahead, and kind of what significant things everyone's kind of seen. Ulrike, maybe kicking off with you, just in terms of a bit of an oversight on what your portfolio is here.
Yeah, so occupation in the last 12 or 18 months was surprisingly good. So we expected it to be worse. What we've seen is mainly in all countries, stable occupancy also compared to 2019. So nothing bad happened. Also for the countries we're talking about, we cannot complain about the occupancy. Everything went quite well. We've seen in France actually an increase in occupancy that was also quite nice. And yeah, the only country where we had a bit of less occupancy was the UK. Basically because all our assets are focused on international students, and depending on them made the occupancy level a bit lower. But in general, since we are mainly invested in student housing, which is in the affordable region or a segment, we had a high occupancy with mainly domestic students. So that was the past 12 months.
Great, thanks. And I mean, when we're talking about high occupancy, I mean, what kind of level are we talking about? Because I think probably across various different markets, we probably slightly changed the definition of what that's meant over the last couple of years.
Well, I'm talking about above 90%, and in some countries close to 100.
Fantastic. But I'm sure there's probably quite a few.
But that did not count for the UK. So
yeah, of course. I'm sure there's probably a few envious faces.
And that's probably the key point, isn't it, Rick? Whereas the UK is quite a developed market, very mature, a lot of supply, a lot of first generation, second, third generation accommodation. The markets we're talking about are developing, and therefore the competition, the supply is sort of diametrically opposite to the number of students. So yeah. Robustness in market supply, market demand was what we saw in near 100% or effectively 100%. And we don't put that down to anything other than lack of supply in the markets, which is in itself a positive thing, but I guess won't last forever. But it's good to come out the other end such a manner.
And so, John, you've seen a similar kind of performance in your portfolio. I mean, have you seen over the last year? Did you see a significant change in the makeup of those occupiers, or was it kind of in inverted commas business as usual?
I mean, I think anyone that says business as usual is probably sort of paddling fast beneath the waters. But I mean, the reality was that it was more domestic, of course. Fewer international students, online university courses caused more challenges with people sort of wanting to come out of contracts. But I mean, that was a management process, and I'm not saying the occupancy at 100%. We hit our business plan. Some discussions were had along the way, but I've got to say, it was okay. Different profile, and going ahead looking to the future, very different. But getting through the last 18 months has been about surviving and actually thriving and learning where the pressure points are in the business in an emerging market where you're sort of making the rules up as you go along.
Yeah, sure, understood. Thanks for that. Gary, you guys have obviously got an exposure across quite a few of the different markets that we're covering as well. I mean, how do you guys see last year? What what were the key themes that you saw or learned from them?
Yeah, I think it's been mixed. We've got, as I said, we've got quite a broad range of exposure through on-campus properties right through to provincial properties and properties in iconic capital cities. And I agree with Ulrike. I think where we have properties which have been largely in the more affordable end, provincial universities with a large draw on domestic students, we've maintained pretty much stable occupancy throughout. It hasn't been without operational challenges, of course, and I agree with John. If anybody who says that's the case is probably not been in the market the last year. Where we are in those sort of iconic capital cities with high international intakes, I think we're all struggling. I think the market will get there this year, but it's going to be a very late market. We're seeing a lot. There's a huge amount of inquiry. Students ringing to check we still have availability, ringing in all the competitors, and once they found there's still availability, then they'll wait another week to see if they can check in. So I think we're seeing a huge amount of activity this month now because campuses typically are opening later. Vienna, for example, campus is now opening in September or October. So we'll see a lot in the next 4 weeks. But it's going to be a late market. We'll get there, but I think these are still very nascent markets where the product is new to the market. The default of students is the not-for-profit sector. It's the grey market. So I think where there is uncertainty and volatility in the market, it's the new entrants which tend to take that end of the volatility. In places like Poland, for example, I think huge procession of domestic students moving across the country. We are pretty good there. On campus, we're good. So I think it's just those large capital cities with high student intakes. We'll see a late stabilization this year.
Interesting. Thanks for that. And Enis, you guys have got a pretty far-reaching portfolio in Germany. I mean, have you seen a huge difference, similar to what Gary was saying, between kind of gateway cities and the regions across your portfolio over the last year?
Yeah, definitely. We can confirm that, especially regarding capital cities, where we, let's say, struggling a bit, like just an example like Berlin, where you have a huge amount of international students. But compare with the locations where we have in B cities, like just an example like Halle, we stay definitely stable compared to A cities. So I think, again, it's let's say, regarding to the international students. So that means like a lot of international students coming in. That's an interesting fact. So we expect that, let's say, that will be definitely decreased, but we get amount of international students, but not that what we normally expect in a regular market. So yeah, from that point, it's again, I can definitely confirm that what Gary says regarding capital cities versus B cities.
Interesting, and I think maybe I'd like to pick up on that a bit later in terms of the kind of the growth into those regional markets. But just while we're looking kind of back and looking ahead as well, and just looking at student mobility, and Gary kind of touched on it there in terms of interest and bookings. I mean, back in June, I think at the class boardroom, we heard from the partners Housing Anywhere and Student.com that there was some real positivity in student mobility for international students and also domestic students across Europe. And I think that was a bit of a trigger for all of the positivity looking ahead. And now we kind of have a greater idea on universities reopening campuses and teaching face-to-face. And I think one of the concerns we talked about was this idea that many internationally mobile students would be kind of double booking or triple booking locations depending on where they saw travel being easier. I mean, just be interesting to hear, and Enis, what's kind of got you on screen? I mean, how does the upcoming academic year look for you guys? I mean, do you see a kind of a full recovery this year, or is it very tentative? Is it gradual? I mean, if we can kick off with you, that'd be great.
Mm-hmm. I mean, we can definitely say there's a full recovery in general. So in the housing market, it's let's say expected boomerang effect, especially for the PBSA sector here in Germany. So this is clearly seen in the early full occupancy of properties in various locations for the upcoming academic year in Germany. So just an example, we have an average increase in bookings and inquiries of 150% compared to the previous year. So there's basically two reasons for this, in my opinion. So first of all, the current high demand is a combination of the new semester starters, for the upcoming academic year, as well as those from last year who had not booked an accommodation for the time being, because as we know, most lectures took place online. And the second reason is, as you mentioned, as of today, 90 to 95% of lectures for the upcoming academic year in Germany will again be physically on-site or partly hybrid. So both reasons lead to an extremely strong demand, which, to be fair, I never seen before in the 8 years where I'm doing this business. So from that point, it's quite positive, and again, shows definitely a full recovery.
I mean, that sounds hugely positive, and I mean that's a pretty strong number. I mean, even comparing it to the last couple of years we've had, and in terms of again, do you see a difference in the student makeup of those who are booking in terms of, I mean, not just whether they're internationals or whether you're seeing more kind of domestic mobility as well?
Yeah, so there is definitely also an increase of international students. I mean, it's also depending on the city or location. We can see in our portfolio definitely increase, or the average between internationals and domestic students between 50 to 60%, which is definitely a high number compared to the previous year, where we stay on, let's say, maximum 30% of international students. So yeah, from that point, definitely we see a increasing of international students, but also again, from domestic students, depending on, let's say, on the cities especially. Domestic students are more interested in B cities here in Germany, so in our portfolio. And for the capital cities like Berlin, we come to an average number of 60%, 60 to 70% of internationals.
Fantastic. Well, it's I mean, it's great to kind of see that resurgence, and then obviously it comes with a bit of pain over the last couple of years, but equally, I think hugely positive on that mobility. Gary, just kind of I guess spreading a bit further across some of the markets that we're covering. I mean, what do you see a huge difference between the likes of Austria and Poland, and I mean I know also you're in Germany with a kind of a co-living product, but do you see a huge kind of dichotomy between those markets, or is it quite a similar viewpoint for the next year?
Pretty similar. I think in some markets I mean 2019 was a hugely disruptive market. We saw US students, for example, just had to go home. They exited the European markets wholesale when they were told they probably couldn't return. So some of those the market in 2019 just didn't have American students by and large in it. It didn't have a lot of Russian students in it. So this year, we kind of the international domestic balance was sort of reset last year. We're starting to see that come back now. So I think the pattern is similar across markets, but it's interesting seeing some of those individual student groups starting to come back into the market, and having been away for the year, so they're coming back in a different way, in a different way they're approaching it, either as group bookings or individuals looking for different contract types. So I think that year of that break, if you like, has had students rethink, and in particular, I'll reflect a little bit on how operators behaved in 2019. I think the industry has come away looking pretty good. I think most operators reacted to COVID in a responsible, transparent and grown-up way. And I think had we not done that as operators, we could have seen students returning this year in a very more hesitant way. I think we've all behaved pretty well, and I think students come back with confidence that I suspect we all have something similar to late booking guarantees. And if there is a fourth wave of COVID, I think students feel confident that we will be, will be reasonable. So I think that's helping a return to normality across the market. That's sort of the way we sort of approach 2019. But yeah, otherwise, I think they're responding differently. I agree with the other guys. We will get back to something close to normality over the next 3 to 6 months, I think.
Great to hear. I think just skipping ahead, I mean, we've seen quite a significant increased activity in CE, as I mentioned at the start, and especially in Poland. But equally, the kind of the growth from the last couple of years that we've seen in Austria and Czech has been incredible. I mean, for those, so I guess kind of more John and Gary, for you guys, what makes these markets kind of more attractive than some of the more established markets like Germany, for example?
I don't know what Gary's view is, but I mean, for us, it's new entrant in a new market, a new product in a new market. And I think, if you look back to the genesis of the student housing market, which was 30 years ago, whatever it was, or getting towards that anyway, it was the same appeal. You're selling a product that's relatively new, that's better quality than the state or university-owned accommodation, with a sort of a better lifestyle, better accommodation, better facilities. I mean, part of the challenge is sort of explaining what you are to the market, and getting over the fact that often there's a view that it's just international students will be in there and it's not for domestic students. But I mean, we believe for us that the biggest appeal is the depth of the market compared to the availability of stock. So there's something like, I mean, depending on who you are, somewhere between give or take 10,000 beds in Poland. I mean, I've heard lower numbers, I've heard bigger numbers in private dorm terms. But if you compare that to, let's say, somewhere the UK was about 650 odd thousand, and then the number of students is sort of 1.5 million, plays sort of 2.5 or so. So you can quickly see there's a long way to go. I mean, your price point's different, your market's different, product needs to be sort of adjusted accordingly. I think someone mentioned earlier about international students. They're not, wealthy Americans or Chinese. They're more likely to be Ukrainian or other sort of Eastern European countries. But I mean, we feel it's a furtive place to get in the ground floor in a growing economy, and be part of the story and to sort of set the narrative a little bit. I mean, Gary may have similar views. I don't know.
I think for us, it's an interesting hybrid. I mean, taking the Polish market, which is the largest of the CE markets. I think for us, it has a lot of features in common with core. I mean, it's got a long history of higher education, some very old iconic universities in the country, a good number of international students. It's got a history of PBSA, albeit not private sector. The students are used to living in purpose-built student housing, albeit of a domestic, not-for-profit nature. So, and the price point is affordable. So I think for a lot of investors, some of our investors will see that as having core characteristics. It's investable. It's not a lot of what you see in Poland is not as high risk as you might associate with some other frontier markets. But it's not a walk-up market. I mean, there are a lot of things you need to get your head around. Certainly in our experience, we took from the day we decided to start investigating it in Poland to closing our first deal was 2 years. There's a lot of things you need to get your head around in Poland if you want to have a long-term place. There's currency risk. There's no clear planning window in terms of zoning for student accommodation. You've got to decide whether you pick services or commercial or residential, and then you've got the tax attribution to work through. Land is mostly leasehold, so it's all okay, but it does take time to get into the market, and I think for that there is still a premium yield, because it's not for everybody to take 2 years to 2-year entry runway to get into a market. So I think for us it's an interesting mix between some very good core characteristics with still some good yield to be had because of the time and effort and some of those peripheral regulatory risks you have to absorb. That's what we like it. I think once you've done the work, and obviously Student Depot was the front runner some years ago. Once you've done the work in the market, I think it's a very exciting place to be.
I think, Gary, you made a point earlier about vertical integration. I think it was you who made the point, and I think that's part of what we see as the key to the market, because it is a different market. It's got a young population, aspirational, and knowing that market is, I think, key to the success of it. We've often debated whether or not we could become an operating partner to other investors, but we've decided to stick to the strategy at the moment of just growing the OpCo and the PropCo side of the business. There's a long way to go, and I'm never afraid to sort of talk very positively about the market, because I think competition is a great thing in all markets, because what it then does, it starts to create a base for investment values and confidence. But I absolutely reflect what Gary said about it's not as difficult as you think in Poland. It's a very Western, very sort of it's very much like the eastern half of Germany in terms of the sort of the dynamics of people and approach to business and everything else. I think we're very long on it. We continue to invest in the market, and we'll do so for some years. And
just picking up on what you've both touched on there in terms of the time it takes to kind of get under the skin of the market, and once you do, I mean, is there still, do you guys still see even going through all of that, the potential for significant scale in those markets? I mean, at the start you've got plenty of cities with over 100,000 students in total students, so there's a great depth there. Is there the same ability to be able to kind of, I guess, acquire and access those markets in terms of whether it's land or?
Well, I mean, land is always the big challenge everywhere, and probably one of the biggest challenges is the competition from the private rented sector at the moment, where there's a real sort of weight of money chasing that market, and that would be a natural competitor for sites on the basis that, as Gary mentioned, the zoning of the land there's not a zoning for or zoning for student housing. It's either sort of services, which sort of comes under hotels and other things, and also private rented, residential, and other uses. So there are challenges there, but at the same time, let's say roughly about a third of the 1.5 million students will stay at home. So the other 2/3 are mobile. So that's sort of up to 1 million students. Optimistically, or it's up to 900 million students are moving around the country, and also a growing international market. I mean, Poland's seen as a good value market for students. I mean, I know at least one former PA in one of the London surveying firms who went out to study medicine in Poland because it's a fraction of the price, and courses are done in English, which attracts people. I think there's a lot of room for growth. One does need one's eyes open because the land ownership tenure, there are mixes of tenure and other challenges along the way, and it's very easy to make your mistake on the way in when you buy the land with anything in life. So one has to be careful. One of our companies, we have a great strong local investment partner who invests alongside us, and their experience in the market. I think that is an advantage as well.
And it's quite interesting to compare markets like that. When we've got a market like Germany on the cards as well, and with Enis and Ulrike who've been investing in that market, I guess we've clearly is a much more core market, as we've said, and more established, and actually there's providers like Studentenwerk, for example, who provide that not-for-profit kind of approach. And as I said at the start, it's been interesting that domestic investors have been more focused on that. I mean, and just throwing this out to the panel, I guess, would you agree that pan-European investors kind of continue to seek value in those less competitive emerging markets like Poland, Austria, and Czech, or is that fundamentally driven by the type of investors, whether you're a core investor or core plus value add? And Enis, I guess you guys have got some fairly interesting partners behind your German portfolio. I mean, is the view there that obviously that the kind of the core market in Germany suits that capital perfectly, or would you guys ever look at more emerging markets?
Yeah, I mean, definitely, absolutely, because first of all, as Gary mentioned at the beginning, like when we look at CEE, I mean, I also working for international campus where we make the market entry for Czech Republic as an example, where I also just make with them the market entry for Prague, and when you see first of all the demand which is coming, especially for this kind of product, that was huge. So that means it's, from my perspective, so right now is the time for early adopters to come into this market, especially just an example like Czech Republic, but also like in Germany. I think this is also really interesting because if you look for the last couple of years, the more, let's say, most of the pan-European investors are focusing on the 7 A cities in Germany. So right now there is a change, which we also see. So that means the institutional investors also interesting in B cities. I think one of the reasons for that, why the pan-European investors are seeking out for less competitive market is related to various factors. As an example, in Germany, with the current high inflation rate of 3.8%, which is the highest inflation rate in the last 25 years. So the pressure is enormous in terms of high yields and returns. So That means, so in my opinion, in order to achieve high yields and returns, institutional investors especially will need to focus more on B cities, or let's say markets like in CE, Poland or Czech Republic, as there is a high potential definitely from, let's say, from the demand of students and young professionals, which will continue to grow over the next couple of years.
Yeah, no, I think that's a really kind of fair and interesting point. Just to bring in Ulrike here, I mean, in terms of your investment rationale, it's certainly the less racier end of the spectrum. Probably it's fair to say. I mean, how do you view some of the more emerging markets in comparison to your investments in say Germany and the UK and France?
Well, I basically think so. So we started as the first institutional investor in Poland in 2016. So if you want to have a pan-European portfolio, it's as Enis says, we're not the ones investing in the capital cities. So we did that. I mean, we started quite early in 2007. But we also see more regional cities having also higher potential. You see in those capital cities higher regulation. That is also a point for residential. You see higher prices, you see higher rents, and you cannot be in, or in most cases not be in the affordable sector anymore, and your yields are quite low. So that is a reason for regional cities. And to expand to, for example, Austria, I mean, what we've seen in the past 2-3 years is that especially German investors bought heavily in Austria. And well, at some point, someone told me that Austria is always 2-3 years behind Germany. So what we see now, the same development as we saw it in Germany. So heavily yields decreasing, but still an interesting market. And when you look at your geographical diversification, then those emerging markets are quite interesting because they are just at the starting point. So a lot of things are new, product is new, it's coming up. It's not always easy to say so, to enter those markets when you don't have an institutional market in there. So you face challenges, but it's worth it. So to enter them, and well, in the end, to say so, you also make a better return than you do in the institutional markets, as for example Germany and Austria.
Yeah, sure, absolutely, I completely hear that. Just to kind of what else about you, Ulrike? I know recently you kind of launched a bit of a research piece about the rise of residential, and I guess we're kind of talking about PBSA, but equally, you know, within that is the kind of the themes of co-living and a more multi-family style. I mean, as part of that piece, I mean, what themes make this a standout sector for you, and kind of how does student fit into that investment profile underneath that banner? I mean, is it all kind of just underneath the living banner, or are there kind of certain parts which you find more attractive?
Well, in general, well, residential, and we've seen this in the past 12 months, was the asset class that performed excellent. So we see a safe haven, we see also investors from other asset classes switching to residential, or just putting a bit of residential into their portfolios. Of course, what makes it interesting is in all over Europe, we see urbanization, and we see a heavy undersupply, not only in the capital cities, but also in the regional ones. And to diversify also a portfolio residential as this risk-averse character really makes sense. When it comes to the different sub-asset classes, let's name them that way. I mean, we've started when we invested in 2008, 2009. We started already there with product diversification. Main reason also for student housing was that for a very, very long time, you got a bit more yield than for residential. So we shouldn't forget about that. In some countries that is not the case anymore. So you get the same yield as for multifamily housing, but also your product diversification makes your portfolio actually more stable as the geographical one does. And I think, especially when it comes to student housing, in some European markets, we can speak of an asset class and not of a niche segment anymore. So I would say that for Germany, and I would say that also for the Netherlands, we're talking about an asset class and not about a niche sector anymore. And interest is quite strong and high.
Yeah, great to hear, and couldn't agree more. I guess one of those sectors that kind of we've seen quite an evolution, across the continent is around the kind of the co-living space. And Chris, I know obviously you've kind of been patiently kind of listening to everything we've been talking about on the PBSA side. I mean, you probably got as better as insight as anyone else on how this space has evolved. I mean, how have you seen it evolve over the last couple of years from your activity?
Yeah, totally. Thank you. So I'd first start with the numbers. When like Ulrike mentioned, so the asset class, it is this times an asset class. And when you have a look on the Google search trend results, then over the last few years, the search numbers have multiplied a few times. So that's totally also a huge sign for the demand on the student side. However, it's still a very diverse market, and it lacks of a general definition, because a lot of operators call themselves co-living, but in fact they are only supplying micro apartment units with a few additional facilities, and that these facilities most of the people won't use, because the sense of the co-living is the community, the being together. And when you have traditional apartments, micro apartment units, then these are per definition separated. So that's the reason by Coments we won't call them apartments, because apartment means separate. We call them Coments. It's community apartments.
And in terms of, you touched on that kind of that definition piece, and I think one of the things that I see time and time again is the label of co-living attached to, as you say, a broad range of product types. I mean, what does it actually look like to you? I mean, is it closer to the student housing end of the spectrum with cluster flats, or are we talking about kind of it's ultimately I guess multifamily with a lowercase m, where as you say, you incorporate that community, but you're kind of looking at smaller spaces and more efficient. I mean, where does it in your mind sit on that spectrum?
Yeah, sure. So currently, I think the spectrum is more into the target group of young professionals, digital nomads. There are a few very established brands already on the market that cover these target groups, but we have to keep in mind for student housing, this is a totally different target group, because students have a much lower budget, and they of course don't necessarily need that much facilities, for example, on site, like a gym or a cinema or a pool. These are things that young professionals want to have there when they live, but not necessarily students. So we have to give here another view on this. But I think especially when it comes to the situation when we apply the co-living to student housing, then we'll have a huge win-win situation, both for tenants as well as the investors. Maybe we start first of all with the tenants, because in my perspective, customer-centric design is very important to also get higher value for the investors at the end. So my survey had shown that 79% of the students that I interviewed would move into an apartment that is as tiny as 10 square meters on the ground floor, and with another bed over the bathroom, so it's an overall room size a little bigger. But you have to keep in mind this tiny space is right next to a big co-living, like a living room. So we have there a big room like around 100 square meters that is shared with your roommates. And this whole concept has no extras because that was also a point that came out of the study. That the students don't necessarily need them. There isn't that a demand. And the most important thing they are asking for is, in fact, privacy that could be very well offered through micro apartments. But the thing that micro apartments don't offer are the roommates. That was a really high point that that the students wanted to have. And this is, in fact, of course, the community of roommates, and that's a thing that co-living, that's a definition of co-living, and especially when we keep in mind that 1 out of 4 students, so let's say in the age from 18 to 30, are feeling often or always lonely. And that's, I think, in my opinion, a huge point we have to cover, and there's the possibility to cover this with a co-living mindset in student housing and coming back from micro apartment units. And of course, the investor value we should also mention, of course, in this round. So if we get a higher tenant satisfaction, because we focus on well-being and the sustainability and the community building of this whole aspect, then we'll have higher returns for the investors, of course, because the tenants will stay longer in the apartments, not maybe only for 1 year, maybe they stay 2 years and or more, because when you have a good community and a feeling of belonging to the place, then yeah, the tenants will stay longer and the rents will be obviously higher. And especially when we also keep in mind this fact of sustainability, because there's also a huge trend, and there's a demand for sustainable housing, then we can also offer higher rents to the tenants, and they will be willing to pay that. And this was shown by my study.
Yeah, understood. Thanks very much. And I guess that kind of mix into kind of urban living. And Gary, I'm kind of thinking of your scheme in Aachen, your urban living. I'd imagine that probably takes some ideas from that blend approach. I mean, do you kind of take quite a bit of what Chris is saying, and have you incorporated that kind of approach into those kind of schemes, or is it about kind of creating a place where both tenant types can mix, from students to young professionals?
For me, I think co-living has been more, for us at least, it's been more of an evolution. I mean, at our core, we're a student housing business, but you know, the more the quality of student housing improved year by year. I mean, 10, 15 years ago, we were talking about student housing having gyms. That was an amazing thing. You wouldn't build a student house without a gym now. You know, the more the quality improves and the specification improves, the more we're seeing students, you know, it's either just staying on or wanting to come back post graduation to live as young professionals. So I don't think for us it's been a deliberate move. I think where we've seen a propensity of students to be more than residents to be more than just students, we've made adjustments to design to make sure we keep that demand. In Aachen, it was more a locational decision. It was an iconic local heritage site which we couldn't fully use for students, so we had an adjacent co-living business. But I think that aside, Aachen is a very specific example. But that aside, I think, you know, we're in a world now where students are lifelong students. Students aren't 18 to 22. Students can be any age, any persuasion, and And so, you know, I think co-living is becoming part of the student world. But I would say I think we are cautious that we don't want to drift into non-purposeful mixed communities. I mean, certainly a 30-year-old mature graduate probably doesn't care whether his neighbour is a 20-year-old student or a 44-year-old accountant. I think freshman students coming from overseas, their parents stakeholders, their universities probably want to see that we're maintaining some of the disciplines of student housing around security, mental health, drug abuse, the sorts of things that the effort we put into student housing, which you probably wouldn't need to put in the same way to co-living. So I think for us, we welcome the blurring of the edges, but I think we're quite purposeful. We want to remain at core a student housing business. Where we make a move into co-living, that will be more of a move to accommodate young professionals in a proper young professional environment. The next step will be senior living. You know, we've recently launched a senior living product. Similarly, I can see that there is room for, if you like, intergenerational living, but I don't see them being necessarily one and the same thing. I think they're different products for different groups with some very healthy interfaces if we're purposeful.
I think that's a really interesting point around you make around wanting to kind of retain the view of being a student operator and ultimately, you know, that kind of creating a trust among students. And, you know, we've seen various operators who have kind of blurred the lines a bit further to no detriment. I wonder if, you know, and we've been looking at quite a few, if you take Warsaw, for example, quite a few co-living developments or developers looking to build in that space. I mean, do you see that as, or one for the panel really in general, I mean, do you see that as a kind of a competition? I mean, we talked earlier about the competition with land pricing and pricing more of a co-living / resi style, but, you know, even from as an operational point of view, do you see that as competition, or is it everyone can kind of live harmoniously together?
I think when we keep in mind the huge market, then there is less competition in this whole thing. And also when we keep in mind that co-living is more space efficient than normal student housing, when we compare this to those, for example, 20 square meter private apartments, micro units, then these are less space efficient than Coments co-living unit with 10 square meter and the bigger common room. So if you compare this competition to the space usage, then Coments, for example, would be a great alternative. Yeah.
Understood. Thanks for that. Guys, I think we've kind of run out of time. For kind of to answer any of the audience questions, but also for any more discussion. But I think it's one of those themes that we could kind of discuss for another couple of hours, whether or not it's just purely the student piece or the co-living piece, because I think it's all incredibly relevant. But I think I'm being nudged by Kellyanne to start wrapping up. So but guys, thanks very much indeed for all of your inputs. Kellyanne, over to you.
Yeah, thank you so much, Stuart. Really, really interesting conversation there. Thank you for kind of driving that conversation forward. And thank you, panel, for sharing your experiences, knowledge today. It was obviously really interesting to find out about how different, but also similar some of these markets are in lots of different senses. And also, as mentioned, to kind of challenge those thoughts about the blurrings of lines between co-living and PBSA as well. So thank you to our attendees for attending today. You can continue to network with each other on the StopCard app and also ask questions to our panelists as well. They have profiles on the app as well. So make sure that you're following us on LinkedIn. We will be posting some further information about this event and up and coming events.